Today in the grain market, corn made a new high with bullish expectations of the USDA report that's going to be coming out tomorrow. We rallied 17 cents. We got up to 565 and 3/4. So that new high is just driving ever so close to that $6 objective that we talked about last week. Now, for the report tomorrow, we want to watch for the new ending stocks for both corn and beans, plus South America crop estimates. All those are going to have an impact on our markets, and certainly the expectation means is that they're expecting the report to be bullish, even though we are expecting some declines on some of those numbers. But the reduction in world stocks also will help to bump the market up, and I think that maybe it's going to be a little less so for beans, but overall, corn is still the leader right now. Option volatility did jump up today. It was actually on the decline last week as we got to the end of the week, but it jumped back up with a move like today. We see the May volatility is up about 2%. Over the March. So it looks like already the markets are starting to shift over to May, even though we do have more activity in the March contract so far. That's going to be changing over the next week and a half or so. Now, soybeans did surge as well. The demand rationing is the focus right now. And I think that we got up 25 cents today. We're still 45 cents off the high from last month, but we're awaiting the report. And I think traders that sold out last week are looking to scramble to get back into the market, and it really rallied it actually a little bit more than we expected before the report. We expected really some positioning or some adjustments to positions as we're looking at February USDA report, which normally is a relatively benign or more of a flat report, but today all the numbers are important, and so everything that we get is going to be digested into the market, and then we'll move on from there. Right now in the options, there's the $13 strike, has 18,000 open interest, so perhaps that was holding the market down, but and maybe even keeping us into that consolidative stage, but certainly we broke out of that today with the market moving higher. Wheat was also higher with Russia export restrictions is the real issue right now. The prices did go straight up 16 cents for the wheat. With the Matif is also higher. The USDA is really expected to just have a smaller reduction for wheat, both in the world stocks and the U.S. stocks. Plus, there's going to be, they're expecting feed demand to really be on the rise as well. That could help wheat. Now, normally we're thinking that wheat is going to really just follow corn and beans, but on its own, it was really pretty strong, really across the board. Kansas City and Minneapolis were also up. Option volatility is back up. It was also on the decline like the other options, but it's back up for now, and so we're going to be watching that closely. Now, colder temps could come into play, and that could be an issue, possibly, rivers freezing, logistics issues could play a little bit of a role in the markets right now. And there's also the old saying that when there's cold temps in Feb, there is warm temps in July. So that's just something to look at going forward. But I think we've got a lot more volatility in store, and certainly as we watch for the report coming in tomorrow at 11 o'clock Chicago time.